Okay, everybody, and welcome back to the Morning Edge webinar. And for those of you who have missed it, we had the Trump advisor Navarro on the Financial Times was quoted as saying that the Germany is benefiting from a way undervalued euro, and that really sparked the euro. Now the euro, like I said yesterday, we had come into this area here, the 624. Our target had been 605. We had mentioned that since last week. Was 609 being the 38%. And I didn't even think we'd get there that soon, which was Monday. I thought we'd get there by, let's say, maybe even as early as today, had the market, pull back. Which I thought we'd pull into like the upper sixes, maybe 660, and eventually come down. But we actually went and hit it. Or came very, very close to it yesterday at 620. And when we pulled back, we talked about them getting some support here. When we moved back up in here, it looked like, okay, well, partly I mentioned to some of the guys the 709, which they pulled back, from that area here. You see them pull back, but they went and turned around and reasserted themselves. And then before you know it, in the morning, when that headline hit, that really opened the door for them to go in and squeeze it right here. And let me just a moment. Open the door for them to go in and squeeze it. And squeeze it they did, although we're into this key area here at 758, right there. So I think we're stretched. The only thing is, like I said, going into the FOMC, it's hard to see. Jack had mentioned maybe we'll have some month-end flows and we can blow them on the way up to 820. In a situation like that, anything could go and happen. Although I'm a little bit hesitant to think we can get too much higher ahead of the FOMC. I mean, I certainly wouldn't be getting long up here at this point. That's my idea. Let's go on and move into the cable, and let's go and pull up the bias chart. So for right now, it'd be this was, our old target from before, the 758. So you can look at it just above the highs at 776. So we'll use that as resistance. And so you can see here right now, we're kind of like, we're holding up here, but we're not able to gain on that. So let's take a look at for support. We already talked about this. I think that's going to be here at 716. Now let's go in and take a look here at the cable. Now the cable, we got to our area here, which was 2411. That was our limit, or I mean our target. and we got right there to the 24.11. And we're bounced off. Obviously, a lot of it has to do with this bounce back we're seeing in the dollar. I mean, it's or sell off in the dollar, but bounce back in the euro. It's basically, he didn't mention anything about the cable, but it's going along for the ride, essentially. So we're going to go in and stay, at least for support at this point. We did come down to 24.11. So we'd have to say for support right now, we'll do this area right here, the 23.62. So we'll broaden it out a bit. And for resistance, let's take a look here. We'll go in and keep the resistance here, which is this 25.63. This we're going to still stay, it's in the range. You see how they're having trouble getting past the 758, but it's not just the fib, because we had the fib even lower, we had it at 42. It's because if you look at the touches coming across here, and that's what I'm saying is, I never put my levels at the high and low, okay? Because I always say, how many people sold the high and how many people sold bought the bottom? I mean, obviously there's some that do, but I'm just saying it's not very many. So I try and go with the most touches coming across to come up with a level. And you can see that right there, 758. Doesn't mean it's going to stop the market. I mean, we've had some good experiences with some of these levels, like here's the 624. You see the different touches here with its highs and lows or the bodies. And the low was, you know, we had the 624 and we set on the air. Well, they're going to find some support here. And it went past at 4 pips. And then we obviously moved higher. And I told the guys yesterday, hey, I like selling this thing against 709. And then we turned around and we dipped. Now, we came back up in here, and I was telling them, I go, hey, look, if we get a 30-minute close above 721, that opens the door for us to go higher. And he kept getting slept back. And now, with this headline that came out, we really ripped him. But you know what, to be quite honest with you, we could have ripped him a lot further if they wanted. So part of the reason it's probably being held back or restrained is with the FOMC. So let's go in and, so we've taken care of the euro and the cable. So we'll move into the Aussie. And the Aussie's, you know, basically kind of going for the ride on this one too. Now the Aussie, we've been looking for a lower move. Now we're back at that 75.75 again, 75.74. Back to this key level. We were looking for this to rotate lower. Obviously, we're working a little bit higher. The Trump news is giving it a little bit of extra juice here. The resistance for now, and we don't, if you're bearish, you don't want to see a 2-hour close above 75.74. You don't want to see that. We'd have to put it, I think we had it before, we have to say it's 76.30, because I'll tell you what, if they get a 2-hour close, it's going to, above 75, it's going to open the door for them to test higher. And you'd have to say, you know, it is what it is, and that will move up here to 76.30. Another thing is, we didn't cover any news, but it was saying the Asian currencies were benefiting overnight. So that's aided, you know, the Aussie dollar to work a little bit higher. So the resistance would be 76.30, and we're going to put the support. We do still have it at 74.30, but on a very short-term basis. Well, I think we're going to still stay with that 74.30, but let's move this up a little bit higher. $75.02. So on a short-term basis. Euro's still hanging around up here. My thoughts are, as in traders from New York, as they roll into their desk, some of those people are getting stopped out, which is probably providing that extra bid. I still would expect this thing to, once again, Jack brings up a good point about the month inflows, but I'm just not, I would, going into an FOMC, although they rotated out a couple of hawks, it's still a risk. The thing is, if you were short, it almost seemed you would have to go on and you'd probably give it a little bit more room. So let's go into the Kiwi. Now, here's what we got above that. Here's the key here. We talked about this potential for a little short-term head and shoulders. And we've been on this since last week. And we talked about this right shoulder. And you saw the market. We said, as long as we don't close above this area here, which I think was 75, I think it was. Let's take a look. 72.70, which we didn't. I mean, we just held it right there. So notice how it kept toying with it. And then we back down. And we said what you don't want to see, because it'll negate it, is a 30-minute close, a 2-hour close above 72.70, which we got that right here. You see that? At 72.81. So at that point, right there, we finally closed above this. You negated the potential for this. So it's opening the door higher. So that would, closing above that right shoulder, then negates this, and now opens the door for them to go higher, the Kiwi. So let's see with this thing, now with everybody's going for the ride, with Trump's, the Trump advisor saying, hey, the euro's way too strong, blah, blah, blah. So resistance at this point, because you get to figure, if someone played that, or anyone that was short and thought, okay, this is it, what would resistance be? So resistance would have to be right there with these touches, which would be 73.57. And we're going to mark that off. Hang on. Right there. And we got this little high right there, that little nudge there, 73.61. So let's say resistance is going to be 73.61. And support, we're going to stick with the bias pivot, 72.25. That's going to be support. Right there. So let's go on and go now, excuse me, to the dollar CADs. I know. Yesterday we had support. This one's kind of all over the place a little bit, but we had resistance at 31.90, support 30.32. Oh, there's a 31.91 and 30.32. We're going to keep the support still at 30.32. It's on a very short-term basis. I mean, it doesn't mean that they can't challenge here, but we're going to keep it there at 30.32. No changes. And on the upside, this 31.91, we're going to keep that there too. You really won't see that now until we get into, let's say the FOMC decision, but we'll adjust that for tomorrow. If need be, tomorrow it could be ended up here at 32.18. But for right now, it's still going to stay the same, 31.91, support 30.32. So you're going to see some short covering as we come into this area. So that stays the same. Let's get into the dollar Swiss. And on the dollar Swiss, we had 99.30 and par 61. We had kept that one the same. This one actually got past the 99.30. You see that right there? So we've come as low as 99.06. Obviously, this got weaker because of the Trump rhetoric, or the Trump advisor rhetoric about the euro being way undervalued. So as I mentioned, something like that happens. Everybody jumps on the train. Everybody is going to get a ride. And so you see the same thing here with the dollar losing against the dollar Swiss. You can see here that we did come into okay 99.33, and our support was 99.30. So the low was 32 or 33. So we kind of dilly-dallied up here, messed around with this 99.58. We talked about this been trading in a very quiet range. And I said our support was 99.30. And came down to 99.33. But we didn't do much of anything when we got down there. I mean, they came off of that support, but they didn't do much with it. And now we're breaking lower. Obviously, the whole thing about, everything's undervalued, blah, blah, blah. For right now, and we're working lower, it's going to be the top of the zone here, which is 98.92. I think we might be a little bit overdone at this point. You see here, this zone. So we'll call it 98.92, and resistance is going to be 99.58. And this is definitely bearish, okay? And we'll take a look at the dollar yen. We're clipping along because we didn't cover any real news. I mean, because everything had happened right before we came on the webinar. So let's take a look where we stand here in the dollar yen. This has been a real tricky one. And support was 13.94, support 15.74. Obviously, we've moved down below this 13.94 with the whole thought about the dollar being overvalued. Essentially, just saying that. I mean, he's saying it's undervalued. The euro is basically saying the dollar's overvalued. So we had some pretty good movement because we thought, hey, going to the FOMC, if they do raise, we're going to move up in here. Obviously, everything spun going the other direction with the dollar losing and then the Trump advisor tweaking it even further by saying, the euro is way undervalued, which it is undervalued. I mean, like I said, they keep on. That was one of the concerns. I forgot who it was that brought it up yesterday about, the Bank of Japan and how the Trump administration may want to label Japan as currency manipulators. And there was a story from Reuters was saying, hey, look, if that does come out, what the heck is the Bank of Japan supposed to do at this point now? I mean, they're running out of options. They just keep buying and buying and buying. I think they were buying this last time. They were buying 5 years and 10 years. So this kind of plays into that. As I'm saying, is everything really, if you look at it overall, these countries are running, or these areas are running out of things that they can go in and do, whether it's the Eurozone or with the ECB or the BOJ. So at this point, you're starting to see, which I thought, hey, look, the door was open, all things being equal, nothing being, done. And let's say that the Fed did take action. I thought we could come into there if they did. Well, one of the things I missed and was pointed out by Gartman was that they're rotating. They're in their rotating voting thing. So two of the hawks are rotated out. So it makes it more likely that they will not take action. So that's kind of spun things around. And then, of course, with Trump saying all that stuff about essentially the euro, but essentially what they're saying is, the Trump advisor, the dollar's overvalued. So then you see the yen start to appreciate. Obviously, it's going to trade inverse to this because it's the dollar versus the yen. So we've seen this work lower, and now you basically flip things upside down at this point. And so now we're in a situation where probably going to work lower, and now going past FOMC, you could see a bounce, but then maybe a resumption of a down move, and them have to test lower before they could possibly even try and go back higher. So at this point now, we're going to have to go back to here, 1255 for support. And resistance is going to be this 1392 now at this point, because they'll be looking to, probably in the bigger scheme of things, we'll be looking for a correction, probably back towards 1050. So on a short-term basis, 1255 may have to come down here. Doesn't mean it stops it at that particular pip, but that's probably where they ultimately end up going to. And resistance at 1392. So $12.55. $13.92. I'd give it a more bearish bet, but it's really technically it's still sitting in a range. So that's where we are. It's already time for a break. Well, actually, no, we've got a little bit more time. Just a little bit more time. Okay, so let's move into the cash dollar index. So we had par 24 and 101.07 yesterday, and we did get up here. Actually, we were on the air at the time. We got up to, we actually made it to 101.02, and we had 101.07. There's our 101.07 there. So that capped the market nicely. Obviously, now we push with this whole Trump news stuff, push well past the par 24, par 05. So we're into support here actually right now. This is support. But we have to give it a little bit more room. You see right here in this level, we have to give it a little bit more room if they want to push it, So that would come in at this 99.85. Obviously, I guess you'd have to look at the low, the actual low, which would be 99.79. Because we are on the highs our lows basically. So 99.79. And resistance. Par 25 was good before, but resistance you'd have to look at par 45. We'll call it par 46. All very short term with its resistance to support. Okay, so it's time for a break and we'll be back. Thanks for joining us here on the webinar.